Now, there is another one big thing that we are all looking out for here, and anticipating, and obviously it's in the news every single minute of every single day, and I am referring here to the election, of course. Do you have any views on that? Because there are some things that I hear about how, especially if there is a contested election, if there is no clear outcome, or if somehow this thing gets dragged out and there's uncertainty and unrest potentially, that could really kind of screw things up.
Yeah, certainly is a major topic of conversation for us with our clients right now.
Right.
I'll separate my answer in two components here. The first one is to answer your question regarding the contested election possibility. What I would say is, if that does happen, and it's still a very big if at this point, then I would chalk that up to kind of as a black swan event type of thing. It's really difficult to predict what the outcome of that will be. We really haven't had something like that happen, certainly not in recent history, and it's very tough to try to forecast what that means from an economic perspective, because you have to layer assumption upon assumption upon assumption, right? And at that point, it's just a guessing game. But I can tell you that when we look at the impact of elections in general, what we find is that there's actually fairly little immediate impact for the economy. What I mean by that is that it's not about the party that gets elected into power. If you look at, for example, GDP growth a year after each of the presidential elections since 1950, it's essentially the same, whether it's a Republican or a Democrat in the White House, roughly 2.8%. So kind of a rounding error. The economy essentially has no preference for one party affiliation or another. Right. What really makes a difference is policy, right? And you can understand that it takes time to pass significant pieces of policy, and then it takes more time for that policy to kind of unfold and really start to impact the economic cycle. And the 2016 election is actually a perfect example of this. So back on the campaign trail in mid-2016, President Trump had a lot of big ticket items on the agenda. There was healthcare reform and immigration reform and infrastructure and trade and taxes, right? And it wasn't until a full 2 years later, in 2018, that we had the first meaningful piece of policy actually get signed into law, which was, of course, trade and the tax reform package. Right. Now, it took another 6 months from that point for it to actually affect the economic cycle in the United States to the positive, right? Especially on the taxes side. So what we're saying is that the outcome of both the economy and likely, in the longer term, the market itself is going to be unaffected by the immediate implications of the election. It's likely going to be visible kind of in the late 2021, maybe into the 22 timeframe, but certainly we're not looking to change our forecast for economic performance for 2021 based on who wins in the November presidential election.